Hello everyone, welcome back to my YouTube channel. So in today's class we are going to learn about provisions of Partnership Act that is relevant for accounting. See, in the last class we learned about partnership deed and the contents included in the partnership deed, right? So what happens means if there is no agreement on any matter, then what we need to do, the provisions of the Indian Partnership Act 1932 will be applicable. Clear? When there is no agreement on any matter, means that there is no content included in the partnership deed, then we need to follow the provisions of the Indian Partnership Act 1932. So what all are provisions are included in the Indian Partnership Act? So today we are going to learn about the provisions of Partnership Act that is relevant for accounting. See, provisions, it means what? It means the rules given in the law that partners must follow. That is what? Provisions. Now, the important provisions affecting partnership account are as follows. As per the Indian Partnership Act 1932, means if any information, if means about the profit sharing ratio, that information is not available or that is not included in the content of the partnership deed, then we need to follow the provisions of Partnership Act. Clear? So first one in that, it is profit sharing ratio. It means what? If the partnership deed is silent about profit sharing ratio. Clear? The profits and losses are shared equally among all partners irrespective of the amount of capital contributed by them. Means if the partnership deed that is silent about profit sharing ratio. Now we need to follow the provisions of Partnership Act that is 1932. What it says? So it says that profits and losses are shared equally among the partners irrespective of the amount of capital contributed by them. Means we should not take the amount of capital contributed by them, means on that basis we should not share the profit or losses. We have to share equally among all partners. Clear? Means without considering how much money each partner has invested in the business. Means for example, I will explain through one example. See here, if partner A, he invests rupees 50,000 and partner B, he invests rupees 20,000. A invests rupees 50,000 and B invests rupees 20,000. But there is no partnership deed mentioning the profit sharing ratio. Clear? Now what we have to do? We need to follow the provisions of Partnership Act that is 1932. So according to the Partnership Act, both will share the profits equally. Means 1:1 ratio. So profit is shared equally, not based on capital contribution, means irrespective of the amount of capital contributed by them, means not on the basis of amount invested by them, but they need to share the profits equally. Clear? So I hope this is clear to you all. So now next, second provision, that is interest on capital. Interest on capital, it means what? No partner has the right to claim interest on capital contributed by him in the firm unless it is clearly mentioned in the partnership deed. No partner has right to claim interest on capital except it is clearly mentioned in the partnership deed. Even if interest on capital is allowed, it is payable only out of the profits. It means what? It means partners cannot automatically ask for interest on the money he or she has invested in the firm. Clear? Means for example, if a partner, he invests rupees 50,000. If a partner, for example A, he invests rupees 50,000 as capital, they will get interest on that amount only if the partnership deed clearly mentions it. Only if the partnership deed clearly mentions it. If the deed is only silent, then no interest on capital is allowed. Clear? So also, even when interest on capital is allowed, if interest on capital is allowed, it is paid only if the firm has earned profit. Clear? If there is no profit, interest on capital is generally not paid. Clear? That is what interest on capital means. No partner has the right to claim interest on capital contributed by him in the firm unless it is clearly mentioned in the partnership deed. Even if interest on capital is allowed, then it is payable only out of the profits. If the firm has not earned any profit, then interest on capital is generally not paid. Clear? This is the provision of Partnership Act. First one is profit sharing ratio and second one is interest on capital. Now third one, that is interest on drawings. Interest on drawings. It means what? See, no interest is charged on drawings. No interest is charged on drawings made by the partners unless except there is a specific provision in the partnership deed. Clear? Usually no interest is charged on the drawings, but if the partnership deed allows, if there is any provision, then interest on drawing is allowable. Clear? So drawings means what? It means the amount withdrawn by the partner from the business for personal use. Clear? For example, if a partner takes money from the firm to pay personal expenses, it is called drawings. If a partner takes money from the firm to pay personal expenses, that is called as drawings. Here, interest on drawings means charging interest on that withdrawn amount. So, according to the Partnership Act, no interest is charged on the drawings unless it is clearly mentioned in the partnership deed. Clear? So, if the deed is silent, partners do not have to pay interest on their drawings. Clear? I hope this is also clear to you all. Now, fourth provision, that is interest on loan. Interest on loan. It means what? If a partner gives a loan to the firm for business purposes, he is entitled to receive interest at 6% per annum even if there is no agreement. What provision says? If a partner gives a loan to the firm for business purpose, he is entitled to receive interest at 6% per annum even if there is no agreement. Means if a partner gives a loan to the firm for business purposes, apart from their capital contribution, remember, the loan that is given to the given by the partner for business purpose, but apart from their capital contribution, that partner has the right to receive interest on that loan. How much? 6%. Clear? So, according to the Indian Partnership Act, the partner is entitled to 6% per annum. Clear? Even if there is no specific agreement in the partnership deed. Even if there is no agreement, so the partner is entitled to receive interest at 6% per annum. Clear? For example, see here, if a partner, for example B, he gives rupees 20,000 as a loan. Rupees 20,000 as a loan to the firm. Now, the firm must pay 6% interest per year on that amount. Clear? Means partner has the right to receive interest on that loan. Clear, right? So, this is different from capital because loan interest is allowed by law even without agreement. Clear? Now next one, fifth provision, that is a remuneration for firm's work. Remuneration for firm's work. It means what? Remuneration for firm's work. See here, no partner is entitled to receive salary commission or any other remuneration for taking part in the business. Because partner is not an employee, he is the owner, right? So he is not entitled to receive any salary, commission or any other remuneration for taking part in the business unless it is provided in the partnership deed. If it is provided, then he is entitled to receive, otherwise no. Clear? It means a partner is not entitled to receive salary, commission, bonus or any other payment for managing or working in the business. This is because all partners are considered as owners of the firm and not employees. A partner, they will get the remuneration only if it is clearly mentioned in the partnership deed. Then only he will get. Clear? Easy, right? So first provision is profit sharing ratio. If there is no any information in the agreement, then profit and losses, they are shared equally among the partners. And interest on capital. No partner has the right to claim interest on capital. Even if interest on capital is allowed, it is payable only out of the profits. If there is no profit, no capital, interest. Clear? Now interest on drawings. There is no interest is charged on the drawings. And interest on loan. Here the partner is entitled to receive interest at 6% per annum, even if there is no agreement. And remuneration for the firm's work. No partner is entitled to receive salary, commission because partners are the owners, not employees. But if it is mentioned in the partnership deed, they are allowed. Clear? Till here it is clear, right? Now see, apart from these, the Act also provides, apart from these, the Act also provides that if a partner earns any personal profit, by using the firm's name, property or business connection, such profit must be given to the firm. Clear? See, if a partner earns any personal profit by using the firm's name, property or business connection, so such profit that is given to the firm. See, suppose for example, partner A, he uses the firm's name and business to contacts to make a personal deal, and business contacts to make a personal deal and earns rupees 10,000 profit for himself. Now, since this profit was earned by using the firm's name or business connection, so partner A must give that rupees 10,000 to the firm. Clear? So I hope this is clear to you all. Now next one, also if a partner runs a competing business similar to that of the firm, he must account for and pay all such profits to the firm. Means if a partner starts or runs another business that is similar to the firm's business and competes with it, the profit earned from that competing business should be given to the firm. For example, if the partnership firm sells clothes and one partner separately starts another clothes shop. Clear? One partner separately starts another clothes shop nearby and earns profit from it. So that partner must account for and they pay that profit to the firm. Clear? If the partnership firm sells clothes and A and B, they are doing clothes business, and A separately starts another clothes shop nearby and earns profit of rupees 20,000. Now A has to pay that profit to the firm. Clear? So what are two provisions? First one, if a partner earns any personal profit by using the firm's name, property or business connection, that profit must be given to the firm. And if a partner runs a competing business similar to that of the firm, he must account for and pay all such profits to the firm. Clear? So these are the provisions of Partnership Act according Partnership Act 1932. If it is not mentioned in the partnership deed or agreement, we need to follow the provisions of Partnership Act 1932. Clear? So I hope this concept is clear to you all. If you have any doubts in this concept, please leave a comment. Thank you.